Hey, good morning. It is 6 a.m. on March 20th. You can see my camera is not on. It's because I still haven't moved my camera back over. So we're just going to have no video for today, but I will share my screen so you're not staring at nothing. Before I forget, this is a short week. We have Good Friday on Friday, and the markets will be closed, and we will be closed as well. So we won't have the pre-market or post-market analysis on Friday. We've already decided that we're not going to do the post-market analysis on Fridays anyways, because we have the weekly market reviews. But because it is a shortened week, we're going to expect that there's not going to be as much participation in the market. Volume might be a little bit low comparatively, and we could see on shortened weeks, we have a tendency to be biased towards flat or maybe even a little to the downside. It's difficult for us to get higher or make all-time highs or new highs, swing highs when we have the shortened week. So normally we just trade sideways. There is potential for us to move downwards if news is really bad, but in general, the senior traders go off the desk, they take vacation time, and for that reason, the junior guys, they don't want to rock the boat and will mostly chop sideways. You won't see a lot of capital be putting to work in general. And by the same token, we dial down our algorithm so they're not as active while the senior traders are gone. So don't be too surprised if we have a muted week. We don't get a whole lot of volume, or if we just chop sideways for the most of the week. Now, yesterday, when we were looking at the price action, we said that this is still a little too high. We didn't get enough of a pullback after that all-time high. We could just chop sideways. So this could be it. We could just go in a range, but our expectation, the higher probability event, is that we would start pulling back towards the EMA 8, maybe a little bit further. And this morning looks like we're down. So that looks like that is probably going to play out. Let's take a look at our futures to see just how much down we are and how significant this downward movement is so far, at least from the futures perspective. Okay, so we've got our S&P 500 down 30 basis points, so on the verge of being significant. We've got our NASDAQ down 51 basis points, so that is significant. And then the Dow Jones a little under 20 basis points, so less significant, a little bit more random in the Dow Jones. So over here, the S&P, if we slip any further down, then it's going to be hard for us to recover back to the close of Friday. And that's probably what's going to happen. We're probably going to trade lower. And then seasonally, we tend to have down days on Mondays. And then the later half of Monday, we can get some bullishness return. Now, seasonality may not play into a huge effect this week because of the shortened week, but Mondays tend to behave the same no matter what, even if we have a holiday on the Friday. What usually happens is if the holiday is on the Monday, then our Tuesday will behave a little bit more like a Monday. And then the Friday will kind of behave the same as a normal Friday. So we are going to expect that we will have a negative bias for most of the day, and then we'll see if some bullishness comes into the later half of the day. So that means we could reach the EMA 8 today. That's possible. And today is a good day to watch and position ourselves to take advantage of a movement upwards on Tuesday. Again, seasonality may not play into a huge effect because of the shortened week, but we're going to just look at it very judiciously and see if we can time it a little bit. So if we get a good opportunity, if we get some good pullback today, then we can get into some good entries tomorrow. And that pullback will help us see some separation and help us decide what we're going to go into. So which stocks are weak and which stocks are strong. Last week, we were looking at the momentum and commenting on how everything was so green that it was impossible to tell which ones were strong and which ones were weak. And so after Friday, we do have at least a little bit of non-green colors over here. That'll help us a little bit. And it makes sense that most of it is on this 5-day moving average. It's interesting that on the 50-day, we popped up this other color in communication services, but it didn't happen in the shorter term, the 5 and the 20. So we'll take a closer look at COM. We'll see if healthcare and utilities are presenting an opportunity, which is interesting because in the weekly market review, you identified utilities as one of the ones I might be willing to go long on. So to see this weakness on the 5-day, that's either an opportunity for us to, because it'd be represent a little bit of pullback on the short term, and then that's a nice place to enter for a longer term period, or it could invalidate whatever I said in the weekly market review. So we'll have to take a look at that a little bit more carefully. And looking like small caps are weak. NASDAQ is showing some weakness, which is the NASDAQ composite, not the NASDAQ 100. So we'll look at small cap. We'll look at these sectors in a little bit. Before we do that, let's take a look at the news that might be affecting us this week, especially since it's a shorter week. We want to pay attention to market moving news because if there's less participation, it might have a bigger effect than usual. Okay, Monday, new home sales. Well, might be significant for real estate. Here, Tuesday, consumer confidence. That's going to be important. So we'll want to watch that carefully tomorrow. Wednesday, nothing really. Thursday, GDP. This is going to be big. Friday, there's reports coming out, but there's no market. So Thursday, with that GDP coming out, that will potentially move markets. However, after Powell's speech or comments at the press conference last week, he opened the door to political influence. So we may not be as driven by reports as we have been for quite some time now. So maybe 1 or 2 years, we've been really driven by the CPI, PPI, GDP report, even consumer confidence. So these will be potentially less significant. It'll be interesting to see the impact of the GDP report, given that Powell has opened the door. So if we still have a large impact from the GDP, then that's the market either not catching on or not really believing that the Fed is quite ready to deviate from the data-driven decision-making. But if we see them caring less about the GDP, then we can probably, that's a pretty clear sign that we're going to start expecting political influence from the Fed, or political influence impacting the decisions made by the Fed. So that'll be very interesting to watch. Because of this GDP, then Wednesday is probably going to be very quiet. We're probably not going to get too much action on Wednesday. Today, do we get the same thing from consumer confidence? Probably not. I think the people waking up and getting back into the market after the weekend is going to overpower any muteness that we might have seen previous to a consumer confidence report. So we're definitely going to want to watch Thursday very carefully, and mostly Thursday. And see if we have any significant earnings this week. Not really. There's some commonly traded names, actively traded names up here, but they're not going to really affect markets that much. They might have an effect on their sector, but that's about it. Okay, so let's go and take a look at those sectors. I'm going to do it from the stock structure perspective first. So actually, before we do that, we can look at some momentum. 90-day highs only 142, 90-day lows 23. So that extreme that we saw in the 90-day highs last week has been relieved after Friday's downward movement. We're not going to see too much of an effect right there. So we'll see if it starts to build back up. But today, you're expecting more of a downward bias. So more than likely, this is actually going to come down even more a little bit. And then we can get some really nice separation between our sectors. So let's look at our sectors. And I'm going to watch for Friday. I'm very interested in seeing which ones were strong and which ones were weak. It's interesting that bonds were strong, but right here, semiconductors did pretty well. And I guess not that well. Oh, we're up, okay, just up a tiny bit, 0.59%. This is a baby bar. So for this, if we look at these bars, they're all a little bit bigger than this one. And that movement from close to close is very small. So this close to this close, that's pretty big. This close to this close is probably similar to this one. This close to this close, also similar. But then here, this close to here, big, 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 big. So this is kind of muted compared to the daily movement. So ADR, if I look at the ATR or ADR, 6.28 on the ATR, so the day-to-day movement, including the gap, about $6.28. And we only moved $1.33. So very, very small movement for SMH. So even though it was one of the top gainers on Friday, that movement is relatively small, which tells me that Friday was pretty biased to the downside. So this change on SMH, 0.59%, you can see that everything else is very little. This is basically insignificant right here, mostly sideways movement, all in this region, and then over here, all down. So mostly negative day. So we're not, so the stronger one, we're going to be XLU. So XLU is stronger. So that sort of flies in the face of this right here. So what we were saying over the weekend seems like it is a little bit more valid. So we'll dig into utilities and see what's causing this right here. And then communication, that's interesting, because that was another sector over here, right? Yeah, communications, we had that weird spot in the 50s. So we'll definitely want to take a closer look at what's going on in communications and utilities. And semiconductors. So really the certain sectors of tech, oh, I guess tech is kind of up here, a little flat. So tech held up okay on Friday. Utilities did okay on Friday, and everything else was kind of bearish on Friday. And the weakest was real estate and retail and financials. Interesting. So real estate and financials influenced by interest rates, but so is utilities. So we have this giant separation on the sectors that are most affected by interest rates. We have the tech and utilities, and then we have the real estate and financials, and we have this weird separation between all of them. They really should react very similarly to I guess actually XLK and XLU should react the opposite, but they're clumped together. And financials and real estate should also react opposite, but they're clumped together. We got some weird market action that tells me that there's a lot of fragmentation in the market still, and we still need a pullback, but I don't know if we're going to get it. If we're not a deeper pullback or correction, because the Fed got political, which means that they exert outside influence on the market, which can temporarily affect how it moves. So the natural rhythm is that we want a pullback or a correction. And if the Fed starts stepping in with their policy and pumping liquidity into the market, then that could keep this going up unnaturally long. And that can usually last, it really depends on how long the Fed exerts its force in the market. So for however long the Fed exerts its force is however long that it can be influenced by the Fed. But the Fed supposedly has unlimited resources because they can print money anytime they want to. But that printing money, especially now, is very different than printing money in 2008 or in 2000, where we've printed so much money in this time period that their ability to affect markets is limited. And if they keep on printing money, that it's going to blow up in their face. So they actually do have a limited capacity to influence the market. So much more limited than in the past. So I don't expect them to try to exert that force for very long. They're going to conserve their power for exactly when it's needed the most. And it's probably not going to happen now. It would happen closer to the election this year. So for now, what we're seeing is forces that look like they want to drive this market a little bit lower. And for now, what we can see is that I'll challenge the EMA 8 and the EMA 20, which would be this trend line as well. And then perhaps the MA 50. And MA 50, now we're talking, we had a new all-time high. So down to the MA 50 now is still about 5%, a little less than 5%. That would be a normal pullback, and maybe that would be enough to relieve this weirdness that's going on in all of the sectors. And I don't think the Fed, excuse me, will freak out just from a pullback to the MA 50. Pullback to the MA 200 would probably be a different story. So if I was the Fed and I was getting political and I wanted to influence these markets to the positive side, I would be waiting until a break of the MA 200 because we'd be a lot closer to election and it would be a much better visual and a much bigger rescue and better use of the gunpowder that I have available if I waited until then. If I start wasting it up here, then all I'm doing is sending markets higher and higher. And maybe visually that looks good too, but at some point, if I run out of gunpowder and this market starts breaking down before the elections, then I'm in trouble. then I can't do what politically I'm driven to do. So more than likely, we're going to be saving that for when we see a pullback or a correction, or if we actually do see a pullback or a correction, it could be just the threat of doing it early or the anticipation of a surprise move could keep this market moving up. And that Powell hasn't been so subtle, but there used to be, like, for example, Alan Greenspan was a master of this, where he would like hint that maybe this might happen, and just the anticipation of it happening kept markets moving in the direction that he wanted to influence it. He never actually had to. He very seldom actually had to take that action. All he had to do was let the market believe that that was going to happen. Powell has been much more of a blunt instrument where he just says something and just does something. He has to basically follow through before the market. The market believes him a lot less than Alan Greenspan. So we'll see how that develops. For now, we are pointed upward. We have a bullish bias in the market. So we should have a bullish bias in our portfolios. And we're going to point our portfolios bullish up after today, because today looks like they're going to be bearish. Seasonality is in effect, and we do have a shortened week. So we're not in a rush. We're not in a rush to get into those long positions. We have time to wait. Tomorrow can look better. Tomorrow, maybe it still looks bearish, and we wait. There is some potential that we'll be waiting all week because of the shortened week and potential choppiness or bearishness that shows up in this market. Okay, So that's what we're looking at. Don't expect too much action throughout the week. On a day-to-day basis, we could see some. Let's take a quick look at our levels in the S&P 500. So we're opening, looks like just below this 520 level. So the chances are of us moving down to 518 are pretty high. Don't expect a huge bullishness to come up. So maybe between 518 and 521 today is going to be our range. And if we do trade down to 518 then and stay there, then we might see some bearishness lead into Tuesday as well. But probably based on patterns, and if there's no really negative sentiment or negative news in the market, then we might trade down to about 518 and then at 12 or 12:30 start bouncing back up. That would be normal for seasonality. So we're really just looking at this the range in between these two lines right here, 521 and 518 today. And of course, if we break either of those, everything I said was invalidated and we could run upwards to the next level, but that would require quite some momentum in order for it to happen. So if you just see it poke above these lines, then don't worry about it. But if we get some momentum, then we can possibly see runs to the upside or downside today. So that gives us a good idea of what to do during the day, how to plan out our week. And for the most part, let's just wait. Let's just wait at the very least till tomorrow and see, unless we really see these prices break that 518 or 521 level. All right, guys, that's it for this morning. Have a wonderful rest of your day, and I will see you in the post market.